Good Monday morning. It's June 14th at about 9 a.m. Welcome to the Plus3 Stock and Commodity Forecast Show. My name is Ben Maldonado. I'm here with Barry Heteraki. How you doing, Barry?
Good morning, everybody. Doing pretty good. Rested up this weekend. Ready for the hopefully a little bit more exciting week.
Well, the week is certainly starting off volatile in the commodities. Looks like someone had some sell programs in because we're seeing weakness on across the board on commodities, grains, softs, metals. The only thing that's not weak is crude oil, interestingly enough, which we've been talking a lot about on the show, and we'll get into that and give you an update on where we are in crude. We're going to start again with Bitcoin. As you can see, Bitcoin continues to make big moves and go nowhere, which is classic fourth wave sort of price action. Big ups, big downs, and we're in the same spot we were mid to late May. I just see this as we got to let this triangle play out. We got to see which way they're going to take it. And even if we break out to the upside on this triangle, we still have to deal with this very important resistance in this 42,000 area. So for those interested in Bitcoin, it's a wait and see based on our work. Barry, what are your comments here on Bitcoin?
Well, I think wait and see for sure, but we have to remember where we came from. We had a couple of key cycles expiring at the high, not to mention the three drive pattern and all of that. So that being said, the finish should be a little bit bigger than what we've seen so far. So I feel like it's not quite finished. But I'd say let the pattern and the price levels guide that. So where do you have that the key level above again? Is that 42?
That's 42 here, and on the downside, you're looking at around 33, 32 area.
Right. So I think that's a bracket, and I think breaking out of that little triangle would be the first sign. You can watch that and see. Although there was a tighter triangle, and we broke that on both sides, so it's really sloshing. So we got to wait and see.
Yeah, steer clear. And when you see patterns like this over time, they do repeat, not just in Bitcoin, but in every asset class. When you see these kinds of patterns, the chop will chop you up. Just to be completely blunt, it's best to stay out of this, let the pattern resolve, and then trade the direction where it resolves. Because trying to trade this, if you're selling strength or buying, or trying to buy weakness in this thing, it can be painful inside these triangles. Let's go the ES. Big week on the ES. FOMC this week. Let's go flip it over to you, Barry, and see what you got.
So this is it's the same chart we've been watching for a while, and one of the key things we were talking about last few weeks, since early May, was to see how this halfway level would be holding up, which is around 42.10. And my thinking was, if we're going to go higher, we really have to settle above, otherwise we're going to just sort of roll over or just go sideways below the line. And what's happened is last week we held above, So that's the key thing here. And we're making, higher lows. And last week, although it was a sleepy week, we were grinding in there, and we grinded. The grinding was all done above the key level, and it was supported pretty well. So I think whatever happens now with FOMC or any type of news that's coming up, we're in that bracket, and we're in a new bracket. So it's 42.10 all the way to 4,300. So that's sort of the new boundary, I think. Now, does it mean we have to go to 43? No, it doesn't, but we definitely cleared 42.10. And so I think dropping a line on 42.10 is probably not a bad idea, just to watch, just to give you a place to watch for strength or weakness. And 43 is the other. And he's holding trend lines well. So that, yeah, that's all I have.
We're just squeezing into that apex of that big triangle.
The squeeze is fairly tight, and huge moves come off of these, and those can come, these can false break to the upside and roll over, or we can just shoot straight up, textbook style. So we'll have to wait and see how that works. But just to know that 42.10 is a key level that we were able to hold above last week. And sometimes I like to go back and look at the bigger picture. And if you look at this from last year's low, we're fairly close to a completing a third full square, which is around 43, 43, 40, 50, I would say. But in order to do that, we really have to clear this 42.50, which I know the gamma guys are talking about. There's a lot of build up there at 42.50. So that's the next level to watch. And I think if we clear 42.50, then this the solid line above the 270 degrees up is in play. And that's around 43.50, let's just say. And yeah, that's my take on the market for now. You have anything to add to that there, Ben?
Just given that we're in this cycle window last week, I'm on alert for potential false break, where we go up, take out the highs, can't hold it, and then start a new cycle. Or, if we do break out, can we hold those highs, and are we going higher still? So I think we have to be open to both possibilities.
Well, I'm glad you brought that up. Just to pop up the weekly chart for a second. It's always good to know where we are and how we got here. So here we are, we're climbing this very steep angle, and we know that can't go on. So I think technically we can be looking at the long side and know where levels are, but you always have to keep this in mind. Like, this can't continue. And when this breaks, it's probably going to break harder than people imagine. So let's keep an eye on this also. And that's quite the steep climb. So I think it's the steepest climb I've seen on a weekly S&P chart for, I don't know, ever. So
like many moons ago, like one of my old coaches in football said, keep your head on a swivel, because you got to look both ways right now.
Yeah. And this is the take we have to remember. So, and the target up here, by the way, we were talking about 43.50, 43. So here we have 43.50 is a halfway point. And I also have dropped a line here on 42.90, 43. So up in that area seems like the next stop if we hold the 42.10. Yeah, that's good enough. Let's take a look at the bonds.
A lot was going on interesting in bonds last week. A big rally to the top of our channel. What do you got?
Well, we've been talking about how the support line down here was critical, and we were really trying to see if it would break below or stay above, and it hung out above it. And we're testing the upper line, and this purple line that we have there, it's from the weekly bond chart, just to be clear. Let me open that up. And well, going off the low in 2018, this happens to be the 50% of that full move that bonds made. And it's right around 159. So in order for any big move, we would really have to settle above it, just like we were talking about earlier with the S&P. And so that's where bonds are. Even now, it's sort of in a weak spot because it really hasn't broken out. As you can see, it's really testing. And we had a spike up here in May, quickly sold off. So I'm not convinced that it's broken out yet, but I would like to have C price hold above this 59 level, and then I think it's got some legs, probably ready to go up and test a little higher.
And you can see the importance of 59 too, because all week, last week, as we approached it, it would get above and then pull back to it and then try to stay on it and then go a little below it. And then they pull back up to it. So there's a real battle going on there.
Yeah, there's a super battle going on. And, but for now, we're stuck there. I don't have a call on it either way. I think we need to wait to see which way it breaks.
Mm-hmm.
For now, I'm considering it still to be sideways, and we'll wait to see how it breaks to either one or the other side.
Agreed.
But to say the fact that it held the 144 level down here, that's firm, right? That's a good sign, strong sign. But it also has to, if it's going to move, if it's going to trend, which is what we're looking for, if it's going to trend, it really needs to take out this upper level.
The other clue that you like to point out too is you got higher lows on your daily too, which is always a good piece of information to put into the mix.
Yeah. It's a similar pattern. If you take a look at this and you match it up with how the high came in, we did the same thing, and we put in a high, then we were stuck in this range for a couple of months, and then lower highs, and eventually it rolled over.
Mm-hmm.
Retest, and so bonds do that. It's elongated sort of turns. So we'll have to wait and see how that works out. But for now, it's bullish looking because the lows were held in higher lows, like you said. Next, we'll go up to, our favorite crude. Only thing that's actually moving.
Mm-hmm.
So, last week we hit the target that we had set up, the ABC up here. And, that was a good sign.
Strong again today. Coming off the low last year, we have a target up here around 74, 76. And coming off of the low of this leg, it's around 78. So 76, 78 seems to be the next number if we can get above this target level, the ABCD. And it's all good. I think just trade to the long side and like you said, keep your head on the swivel. Yeah. And the interesting
thing,
hit
the targets, right? So
yeah. The other interesting thing, Barry, is if you look at it prior to this last leg that broke out, mm-hmm. It looked a lot like bonds, right? The structure is a lot like bonds. Every time it went up to this area, it was sold off. Right. It made a series of higher lows, and then it finally broke out last week.
Right. Yeah, very similar pattern.
Mm-hmm.
And so I think this is it's kind of a no-brainer. We hit the target, so be careful. But the market's still strong, so I think the trend is to the upside until we hit this next set of numbers, which is between 76 and 78. Maybe take a quick look at the weekly.
Mm-hmm.
So weekly looks like it's just getting started.
Right.
And I remember a couple of weeks ago, we were looking at this level to either hold or break and to hold above, and we did that. So it looks like we're in pretty good shape. The trend lines are holding. We haven't even come close to testing the trend lines. And square wise, we got plenty of room to run. So what's not to like, right? I think just tactically, you have to be a little bit smart to trade it, just so you don't get ahead of yourself. Other than that, it's good.
Looks bullish.
Next, let's take a quick look at gold. Well, they are dumping this like there's no tomorrow.
Mm-hmm.
And I think last week last few weeks, we've been talking about gold having to hold above this 1853 area, to keep that strong bullish profile. And the fact that it's starting to break below doesn't really signal a huge amount of weakness. It just could be a sort of a fourth wave-ish correction. So we're watching that. But I think since we broke the 53 level, it's a good idea to look for the next support level. And so if you're playing the long side, I think it's a little premature to play the short side on gold, and I think I wouldn't think of that. But we did finish this 45-day leg, and I think we talked about that. Because of that, we were being cautious, and because of that, we wanted to. And after a cycle like that expires, if it can hold above the halfway point, it's very strong. It doesn't mean it can't go a little lower and correct, but for now I think it's a little bit soft, and we want to see it get above 1853, 55 around that level for it to continue. Otherwise, we'll have to look for support below. That said, let me go from the high. So we had that 45 run up from the low, but we also had resistance at the high. This is what gold was trying to do last couple of weeks.
Mm-hmm.
Was trying to break above that grinding. Then we're trying to buy it up. And I think along the line, if you go back to the old high, the first leg down from the high all through here, it was the same line that held, and that's been a key level, and we couldn't quite get above it. So sometimes market will take a breather and get some momentum and try to come back. So we'll have to wait and see. And so for now, support wise, I like to use the same square and maybe look at the quarter levels or the eights. So the next key level is around 1810, 1807. And although I'm just putting the square, I'm going off this next level that I can see. If you look at the price action, you can see that there's also support there, right? We had it low here, high here. So that's sort of a key level to watch. So anywhere between here and here, it's fair. But I wouldn't write it off just yet. Let's just see. 2 days down is not a big deal. But the next level is around, let's just say 1805, 1807. All right. Take a quick look at the weekly for reference. So weekly the square is coming off of the 2015 low. And, long as we're above 1760, 1770, gold's in a strong position in the big picture, right? I mean, tactically trading short-term swings, you can look at the daily and say, it's a little soft, but here it's in a very strong position. So I would say as long as we're above 1770, it's got legs. And just go up here.
Gold has an interesting pattern that's similar. I'm seeing it across a lot of different commodities. And when I flip through my charts, I'll show you what I'm seeing there.
Mm-hmm. Yeah, sort of a corrective leg here.
Yep.
It would have been nice if we could have held above that. But it could just sort of be refueling. See how it goes.
That's what it looks like.
Mm-hmm. And let's see what we got left. Take a look at the euro. Well, pretty much
the dollar's at an interesting spot, isn't it?
Yeah, dollar's interesting. I'm going to touch on that soon, as just to cover euro since we've been watching it. Maybe cover the dollar first. I'm using a square of 60 for the dollar, and I think for me, the key thing to watch here is for dollar strength. I would really like to see this 91 level be taken out. It's around 91.70, 75.
Mm-hmm.
And the big support on this square is around 87, 88. I would say 88. And we've been able to manage to hold this band between 89 and 91. Although we've been making higher lows, I'm entirely not, I don't think we put in a final sort of a low. And, but we'll see. It's a little too early for me to call this out. That clearly. But for now, we know it's making, higher lows. So it's definitely something to watch along that angle there. But from a square perspective, it's really, 91.70 is sort of the level I'm watching. And you can see it's a key level because we know that was a low back here. It was a test of it here. Again, tested here, rallied and failed. Here's another retest and a fail. So it's a main level to watch. Other than that, we can bang up around there in between. And I would watch the lower trend line just to make sure it's not sloshing around and it's actually holding some sort of trend. Want to add anything to that, or do you have it?
Just that the dollar is confounding a lot of people by not going down. Everybody's talking about, the Fed is printing so many dollars. The dollar is going to be weak. The dollar is going to crash, and it's not going down.
Mm-hmm.
And I think when a market, when there's such strong opinions on one side, where not the majority, but 70-80% of the people say, the dollar's going down and it won't go down, you got to watch out, because that's a recipe for a rocket ship ride the other way.
Mm-hmm. Well, if that's the case, it's certainly showing some early signs here.
Mm-hmm.
So you really have to watch that, because it could go parabolic from this type of a pattern.
Yep.
Let me just take a quick look here.
With ramifications for other markets as well.
Well, to support your case there, Ben, if you take the high in April, you can see we came down and held the 50% fairly well, right?
Yes.
So that supports the case, like, hey, it's really not going to go down that quickly. If it does, this is the level. Clearly, that's the halfway point is the level. And if we drop that, we go the full square.
Mm-hmm.
And up until, we'll start tracking this, but as long as we're holding the trend line, we're above the 50% line, we can certainly go back and test up at that 93 level up here in the big picture, right? So, and for this euro, we were looking for this 21.42 level to hold. If it was going to continue to move higher towards its target up here, the square 72. And it didn't. We broke down. So now it's not super weak because we have this. It's above the 50% of the square. So long as we're between the 21.42 and 20.60, I would consider this to be sort of in the slosh and chop far as trading goes, the pair, and looking for support closer towards 2060 and having a bullish view above 21.43 or so, right up in this area. And it does have a pretty distinct trend line, so that would break by the time we get above that.
Mm-hmm.
For now is weakening, and the dollar is sort of showing that. So we'll see how that works out. I don't have a whole lot to trade this, other than just to watch it for now. I think that's all we have. I think gold. So to sum it up, gold we're watching for support. Crude is okay to trade. ES we're watching. ES, the fact that we held the low, so we're looking for a move higher. So let's see how that works out. I think that's
stay on the grind.
Yeah. Let me give it back to you.
Okay, I'll run through a couple things. Quickly, let's look at NQs. I've been showing this. ES made new highs last week. The NQs, which is the NASDAQ 100 futures, have not, but we are quickly approaching it. Wouldn't be surprised if we, poked our head up here to the 8th spot around, 14,100 area. Wouldn't be surprised if we did that. If we can hold above this, 13,950 level, that's bullish. And you gotta say things are bullish if we on a pullback, if we hold above that. But watching this to see how that one plays out. Let's see what else we have here. Wanted to look at quickly. Here's crude. A little look on the daily. Crude above this level here, which is on my work, it's about 70, 72, 70, 80 area. As long as we sit on top of that, it's smooth sailing to 75 and a quarter. Looks bullish. We were wanting to see how it reacted at this resistance. We poked through and we're staying on top. So as long as we do that, crude remains bullish. Bonds we talked about. Here's my view of where we are. This is why 59 is resistance. Banging up against it last week. Sort of hanging here to see if it can muster the strength to push through. If we can push through that 59 area and stay on top of the half square, 163, almost 164 is the next area where the battle will be.
Quite the move, eh?
Yeah, big move. And on the weekly, there's even bigger moves on this thing, which, I posted something on Twitter last week, like 167, 168 area. It's possible if we can break out. Let's see, what's the next one? Here's the pattern I'm seeing in a lot of commodities. This is soybeans. And a lot of the commodities are doing this. You saw it in gold, and we'll look at it in gold again. It's sort of an A, B, C type correction. Interestingly, Barry and I had a conversation. Every morning we do a quick review of the markets to see what's going on. The ideal situation here in beans would be if we find support right here and can't complete the ABC, which look where the low is so far today. Wouldn't be surprised if they push through in reverse, but soybeans is on the radar right now to see if we can hold here, or we hold once the ABC is completed and reverse, then it looks like the correction will be over and we'll be ready to move out. Structurally, the lows in here would be really good as well, because it would sit on top of this whole formation that occurred over here at the beginning of the year.
And that 50% level looks fairly good too, decent. The 50% right below right there.
Yeah, right here. That's around 1412, 1411. So common pattern, which you'll see in other commodities, is this sort of correction that's beginning, or near ending, I should say, in a lot of them, beans especially. This is gold on a daily, drew in it's a little small ABC, but there it is. Pulling back, sitting on top of the highs here from May. As long as we can do that, it's a normal pullback. Possible we could come back to the full square, which is in a similar area to where you had like 1805 to 1807. Yeah, here's 1810, 1812. So not bearish, just sort of a pause. Timing wise, we had a good run from here to here, and now we're correcting a little bit. Maybe the correction takes into early July, timing wise. We get to the half square and then we can go again. But let's see how the price action plays out. But the thing to notice is the ABC correction after a run in a commodity. That's the pattern that's repeating. It's gold. Let's see, what do we have here? Coffee. What do we see? ABC after a run. Pulling back into an area of support. Could we come down to here, absolutely. If we came down to here, would it still be bullish? 142, 143? Yes.
Mm-hmm.
Because we'd be sitting on top of this high. We're sitting on top of the square. So watching to see how these are going to play out. Are we going to stop at an ABC? Are we going to push a little further? Are we going to turn before the ABC? I mean, this right here, the low so far is very nice structurally. Because we're sitting on top of this and we're sitting on top of that. That's coffee. The one new one that that Barry and I discussed over the weekend that I wanted to share with everyone. This is a major pattern that we saw early on in the grains. We saw it in the metals. It's this multi-year base, multi-year sideways movement. In this case, 12 years of sideways, coming off of a major high, and then beginning to break out from this downtrend line off that high. And natural gas, this is natural gas. We're seeing that in natural gas right now. So what is this pattern telling me is that there's been accumulation. We basically came down, took out the stops off of this low in 2016, early last year. And since then, we've been making higher highs and higher lows. We've broken out of a trend line. Natural gas looks like there could be a 6 to 12 month run, and a potentially pretty spectacular one, off of this huge base that we've seen. Barry, what are your comments on natural gas? I know when we were talking about it yesterday, you had some thoughts as well.
Well, I think the pattern is there. I don't know much about natural gas supply demand side of it, but I know patterns, and this is I'm glad you caught that, and I think we should start tracking it. And it plays into the rest of the entire commodity sector, right? Because it's very similar moves, and this might be one of the later laggards to join the group. And I would say start watching it. It's set up well. Do you have a daily chart of that? Because that looked really interesting when we looked at it the other day.
There's a daily with a little more.
Yeah, so take a look at that. We got 3 highs, which is really sort of putting in a ascending triangle there.
Let's make it a little less messy.
Mm-hmm. So look at that. I think if it breaks, it could just go. It's just ready to go. And everything's set up. And that level, what's that? Is that 28? 328 up there?
328, yeah.
Okay, so, and what's the red level, the main level?
It's like same area around 330. Yeah, 330.
Yeah, right in that level. Okay.
Mm-hmm.
So so we'll be watching that this week for sure. And you can see how he reached up there. Now it could just be a test and it might back off, but I think it's definitely on the radar now, and we got to watch it. And that's the level to watch, that 328 to 330.
And I mean, once we do break out of this, it's a fairly fast move to around 4. And that's a big move percentage wise.
Mm-hmm.
So that's why this is on the radar. It's early in the game, as you can see from the monthly. It's very early. We're just poking our head through this downtrend line. We've had a series of higher lows on the monthly.
And it could take some time, but the point is it is starting to break. So I think it needs to be watched.
It's sending a message.
Yeah.
It's time to pay attention is the message.
Yeah. All right.
That's it. Anything else to add for this week? Anything else on your radar?
Nothing to add. I think we covered everything. We're watching the pullbacks in the commodities and see how that works out this week. We have our levels, and that's our guide. So,
and there's a FOMC, which is the Federal Reserve Open Market Committee, announces their interest rate decision on Wednesday. Key thing is, it's not what the news is; it's the reaction to the news. We've learned the hard way. You have to watch your levels. If the levels hold, then you trade. If they go through, you got to look for the next level. So
and as far as the market goes, at 42.10 is a key level to watch, because if we take that out to the downside now, you really have to be careful, because we're kind of in the middle of all of our cycles here. So it's still not done. Yeah, that's it.
Yeah. Have a great week, everybody, and we'll talk to you next Monday.
Thanks, Ben. Have a good
All right.
week, everybody. Bye-bye.
See ya.